1st January 2019. The main impact of IFRS 16 is on lessee accounting.
IAS 17 leases requires a lessee to classify leases into finance and operating leases. The issue has been with the operating lease accounting treatment, which requires the lessee to recognize only rental expense in the income statement and no asset or liability, even though there is a right to use asset and obligation to pay rentals. This leads to misleading impression of the lessee's leverage and assets in use. What is the impact of IFRS 16 on financial statements? IFRS 16 has introduced a single lease accounting model where all leases, except short-term leases and assets of low value, require recognition of right of use asset and lease liability. For operating leases, a depreciation or amortization charge and finance cost is recognized instead of rental expense in income statement. This increases the EBITDA, earnings before interest, taxation, depreciation, and amortization. In the cash flow statement under IAS 17, the entire rental expense would have been recognized as cash outflows from operating activities. Since the same cash payment is attributed to interest and liability repayment in IFRS 16, there is an increase in net cash flows from operating activities and decrease in net cash flows from financing activities. The total cash flow, however, does not change as a result of IFRS 16.
The transition to IFRS 16 has an impact on financial ratios and performance metrics like gearing, EBITDA, return on capital employed, operating and financing cash flows. There are two approaches for transition to IFRS 16. The modified retrospective approach requires the impact of the initial application to be recognized in retained earnings on the date of initial application with no restatement of the comparatives. The full retrospective application requires restatement of the comparatives. What are the key considerations in the application of IFRS 16 leases? Definition of a lease, split between lease and non-lease or service components, short-term and low asset value exemptions, measurement of lease liabilities and assets, impact of lease modifications, and sale and leaseback transactions.